I'm Carrie.
I'm Toni, and we are
Two Cranky Creatives.
This podcast episode is brought to you by Money Bootcamp, a program made just for artists that will help you feel a little less cranky about taxes and finances. Join and you'll have lifetime access to the course resources. Use code CRANKY, that's all caps, to get a $100 discount. You can find Money Bootcamp at bit.ly/cranky money, all one word. And you can check out a free class that teaches you about why self-employed creatives get stuck in a tax pain cycle and some simple strategies to get out of it at go.sunlighttax.com/register. What are we cranky about today, Toni?
So, Carrie, today we are cranky about taxes because who is ever happy about taxes? And we have the lovely Hannah Cole with us, who we're going to let introduce herself.
Awesome. Yes. And we're cranky about money too. Taxes and money. So, Hannah, I will let you take it away.
Awesome. Well, they go together. So I'm Hannah Cole, and I'm a professional artist. That comes first. But I'm also a tax pro and the founder of Sunlight Tax. And the whole reason that I, am a weirdo who went back to school to study taxes and accounting after, a long career as an artist that is still current, is because, people like us, we do not get served well. As you know, the reason that you're cranky, I think, or one of, is
yes.
we don't get served well or treated well by the accounting community. They don't know if we're like a little unserious dilettante, which is how I tend to have been treated.
Absolutely.
Or a badass professional, winning grants, having shows, selling, supporting yourself on your work, right?
Right.
So
exactly. My favorite is when it gets called an expensive hobby.
Oh, I hate that one. I've heard that. I've heard that one a lot.
And my favorite is just trying to explain what we do to an accountant, or anybody in that field. It's like, even after I explain it simply, like, hey, do you have a throw blanket in your house? It has a pattern on it. I would be the person. They still don't get it. And then they still look at it as a hobby. And I'm like, yeah, but you paid for that blanket, right?
Right. Totally. And also, when you're telling them what you do, there's a part of you inside that's bracing for impacts. What's the horrible thing they're going to say to me? Get a real job? Or is it that's an expensive hobby?
Or you don't really earn enough.
Must be nice
income
to do what you love.
I love the one too of, you don't earn enough income to really need to worry that much about your taxes and money, do you? And I'm like, well, yes, I do. And what would make you think that? But people just tend to view art, I think, unfortunately, as a hobby, no matter who you are.
Yeah.
So it's just tough. Yeah.
And before we go down that path too much, Hannah, tell us a little bit about your art journey and how that led you into going to school for taxes.
Sure. My art journey avoided all the stops on the business preps road. I was anti-capitalist. You couldn't have got me near an economics course. I was just that's for a different kind of person. I don't want to touch that. I don't feel that way anymore, but I did at the time. And, all I wanted to do was make the greatest art that I could. I wanted to be the best. And I wanted to paint. That's what I wanted. And, and also I love other artists. I do have to say that part of the magic of being a creative person is that you get to hang out with other creative people.
Absolutely.
I would have it no other way.
Yeah.
So I think really what, I don't know, my painting journey, many twists and turns. And of course, a lot of weird money mindset stuff came up a lot because of having a strange non-linear relationship between the amount of effort I put into my work or a particular show and the amount of sales that came. And I definitely have more to say on that because I am a kind of artist who works with galleries. And so I don't have such a direct relationship with the person buying my work, and I don't have as many levers of control. And so I often felt really disempowered because I couldn't be direct about that. And it's actually something I love about the work I do now, is that it's like, hey, if like you feel like I'm speaking to you and I'm solving a problem that is a problem you're having, and you can see that I really feel how you feel about it, like you can buy my program, you can join my program, and you know it's going to work for you. But like when you work through a gallery, there's this layer on top that you're kind of not allowed to get into. So that was hard. But basically I went back to school for accounting once I had, well, two things. Once I was treated really badly by my dad's accountant. He sort of he was very dismissive. He was barely even paying attention in our appointment. And like he was sending a meta message to me of like, you really don't count as like a real client, which is kind of cute because he definitely sent me a real bill that was not discounted.
Yeah, of course.
And I was like, that's funny how that works.
Right.
Yeah. So I went back to school to study. Oh, and the other thing, I mean, honestly, was like, I have been, my art at times has been very well received, like well reviewed. I have like critics from great newspapers who've reviewed it, and I've been in museums and like great. I've been very successful on a certain level in art. And to be honest with you, that has not always translated into sales. And it just was it's been hard. It's still hard.
Yeah.
And I had a baby in New York City, and that changed the economics of my life on its head. And I was like,
oh, I can imagine.
Oh shit. Oh shit, oh shit, oh shit.
Yeah. It's not cheap to live there.
No. Yeah.
Turns out.
I'm from DC, and we're not that far off of the, rental market, real estate market, whatever. Like I still cringe when I think about the cost of the condo, the tiny little condo I bought in DC back in 2004 or something like that.
Right. Yeah, it's a big deal. Although, you know what? I'm here from a much smaller city, Asheville, North Carolina right now. And it's pretty damn expensive.
North Carolina is kind of popular right now, though. It's becoming like a destination.
Well, it seems like in general, everything is going up because I'm in Atlanta, and Atlanta used to be one of the most affordable places to live. That was a big city. Yeah. And it's on like a normal, rent inside the perimeter, which is like our, highway that circles the city. You're either inside or outside the perimeter. The rent it's unattainable. So that's all pretty semi-recent in the last 10 years. Yeah, it's crazy. I feel like it's probably a national problem, at least in a lot of decent sized cities. Yeah.
Well, I'm not an economist, and I have not officially studied this, but informally and certainly in my own network, a lot of people have done what I've done, which is like been in New York City, thought they would live there forever, maybe had a couple kids and been like, wait, I cannot afford this, and had to move. And then, I have moved to a beautiful, wonderful place in the mountains of North Carolina. And
it looks
so
beautiful
is everybody
from your
else.
Background. I love your high ceilings.
Yeah.
Thank you.
Well, I have bragging rights because Wichita just made the top 10 for most affordable cities in the United States. So
nice.
I have to admit.
And it's beautiful out there too.
I love it.
Well, I'll take that one with a grain of salt, Carrie. It's the plains.
I've never been, but I mean, I don't know, out there, like out closer to the West Coast, to me just seems so pretty and different. And you can see more of the sky, which is nice.
That is true. We're very flat. It's prairie, lots of grass. But like the reason there was a huge tornado for the Wizard of Oz is because the wind here is ridiculous.
Yeah.
But because there's nothing to break it up, because there are no hills.
Yeah.
But yeah, no, it relatively speaking, it is relatively dirt cheap to live here. So
that's cool.
Yeah.
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 Well, if you don't live somewhere that's dirt cheap, or even if you do and you're just starting out, I know that money can definitely be something that makes me cranky. And you know what? It still makes me cranky. And dealing with taxes is like I get beyond cranky. I will shut down.
Yeah.
I just feel like overwhelmed, and I just don't know what to do. So
I think the lack of access to information is part of that too. Like I was just talking with a friend of mine the other day because another friend of mine, she has a food business. But she's been paying her quarterly taxes, but not filing returns. So now she's freaking out because she didn't understand. Right. Yeah. Someone told her to pay quarterly taxes. So she did it. She didn't understand because for whatever reason, so she's never filed for 3 years. She hasn't actually filed a return. So now she's scrambling to try and find someone who can help her get through all, and work it all out and figure it all out. But in all of, and Wichita is famed for its entrepreneurial resources here, right? We're considered like this mecca for like small businesses and nonprofits. Okay.
Oh, cool.
But no one talks to you about tax structures, and you just kind of get these like, oh, well, decide whether you want to be an LLC or an S Corp or whatever. And, I happen to have an MBA. And so I think that's the only reason I even understood what some of these structures were. And that's about it. And I knew what the self-employment tax was. So I've been factoring that in, but like, I'm always having to tell my friends, it's not enough for you to factor in your federal and local taxes. You got to factor that in because you're not an S Corp, you're an LLC. And on top of that, you're disregarded. And then their eyes glaze over, and I'm like, and that's the extent of what I know. Now you need to go talk to somebody who actually knows, like a Hannah. But like you, who is an artist and a tax professional, you're like a unicorn. You know what I'm saying?
Yeah. And Hannah, I would love, so you work with artists and you meet a lot of artists who are particularly going through the pain point of dealing with taxes, filing, all that stuff. What do you, well, I guess if you want to share a disclaimer, but also what do you run into? Like, what would you say your most common complaints that you hear are from other artists?
Yeah. Okay. I'm going to share my disclaimer. So, quick disclaimer is everything that I say here on this podcast is for educational purposes only, and you should not and cannot take it as tax advice. It's not an individual session. Okay. So with that said, the thing that I see is this thing that I have been calling the tax pain cycle. People get kind of stuck in it. And it sounds like Toni, you were just describing someone who's stuck in it, where one, people who are self-employed tend to underestimate their tax bill because they only think about federal income tax and they forget or never got the education. And just PS sidebar, there's no tax education in this country. Like, don't feel guilty. I think that's a failure of the country, not of you. Oh, yeah. But I do think that taxes are part of civics and should be taught in every civics class in every school in this nation. So that's my TED Talk.
Applause, applause. Agree.
Her TED Talk.
That's my TED Talk on that. And if you are in public office and you want to talk to me, please do. We can put forward a bill. But I think, I think that one, people don't know what self-employment tax is, or that not only does it affect them, but it's going to have quite a dramatic impact, quite a bit bigger than they realized. And so they're not factoring it in. So they way underestimate their tax bill. So that's part one. Part two, people don't realize when you're self-employed that we have a pay-as-you-go tax system that's actually in the law, and you are not allowed to just earn your money all year and wait until tax day to pay your tax bill for the year. You actually have to pay your taxes throughout the year. Now, for employees, this is easy and it's automated. You never have to think about it because it's mandated. If you're paid on payroll, you have to have your taxes taken out with every paycheck. When you're self-employed, as we all know, this does not happen. We do not have payroll. And so you really can get into trouble in a way an employee can't even, doesn't have the option of getting into that trouble of waiting all year with no taxes paid and then facing a mega gigantic tax bill that's even bigger than you thought it would be. And that you're like, oh my God, I thought this would be $10,000 and it's $17,000. What happened? And how on earth am I going to dig out from this? Right.
Right. Yeah.
That sets off the cycle. So I'm happy to talk about self-employment tax and why people underestimate what that is. I'm also happy to talk about quarterly taxes, which is like your path out of this mess.
I definitely want us to talk about both of them because one of the questions that came up for me is, you have a lot of up and coming artists, right? And obviously they don't know about this to begin with. Some of them are not even, they have no legal structure at all. It's just a sole proprietor or whatever, but their expenses are outpacing their revenue in the beginning, right? So they're operating at a loss. Like, what does that look like for quarterly taxes? Because your expense, you literally, I mean, you have revenue, but you also have expenses greater than your revenue.
Yeah. So that's an even different issue. So the good news there is you don't owe any taxes on a negative number. If you have a loss, you don't have a taxable profit.
That makes sense.
In fact, you get negative tax back, which means you get money back. So it's actually, there's an amazing piece of the US tax code that is like there as a benefit as you're starting a business, which is really positive. But the thing to understand is when you start out working for yourself, whether you call yourself a freelancer, whether you call yourself a sole proprietor, you are filing your taxes by default on a form that's called the Schedule C. The Schedule C is just a part of your income tax return, your personal income taxes. And it's where that like freelance self-employed income goes. And I can show you, have one right here taped to my wall because I refer to it all the freaking time. But if you're looking in the video, you can see the visual. If you are not, you can pull a Schedule C, just a blank one off the IRS website. But if you look at the title, it says profit or loss from business. So just want you to note that loss is a negative number. Loss is what it's called when you have expenses that exceed your revenue. So that is not only perfectly normal, it's like on the tax form, like, hey, that's cool. That's fine.
And so do you still do that every quarter, even though you're essentially coming out with a negative number?
Well, so I want to really tease something out here because you don't file taxes every quarter at all, ever. Nobody does. We only file one tax return per year. Also, thank God.
Right. Thank you.
Yeah.
Tax return is the actual 1040 document. And the role of the tax return is to reconcile all the little tiny details that you were just estimating for most of the year.
Okay. So that's making sense. The puzzle is falling together for me now. Okay.
I think that this is the thing about taxes. There's like not good education. So it's like, we don't talk about it even enough to know, like, I do know this, but it's not connecting to this. Oh, those two things connect.
Right.
So anyway,
so the quarterly thing is really, that's about paying quarterly. Yes. Yeah. Because otherwise, to accumulate any money really that you're going to owe throughout the year and then to get hit with a tax bill is very painful. And makes everyone cranky, I'm sure.
So let's A to Z this really quickly to see if I'm getting it for our listeners too. So if you are not operating in a loss, you're estimating. So you've got some revenue. You figure out what your federal tax percentage is, any local taxes you might have to say, and self-employment tax if it applies to you. You're estimating that based on revenue that's come in on a quarterly basis.
Not revenue.
Not revenue.
Very key difference. Profit.
Thank you, Hannah. I thought it was revenue too.
I thought it was
which is why profit. That's why it can be negative, right? Your revenue is positive always.
Oh wait, that makes sense.
It could be zero.
So for listeners that don't know the profit calculation, that's revenue minus expenses equals your profit. Okay. So profits, and you take whatever percentage of that is the estimated tax you might owe. And then you pay that quarterly. And then at the end of the year, usually by, I think depending on what you've established as your fiscal year for your company, is that right? Or is it always April 15th?
Let me just say that almost anybody listening probably does not have a fiscal year that's different from the calendar year. So we can just say, now again, this is not individual tax advice, but for 99.999% of you listening, your tax year is January 1st to December 31st.
Okay. Exactly. Right. Yeah. So, okay, cool. And so sidebar for people listening and why sometimes I say weird shit is my day job, believe it or not, is I implement financial software, or I consult, and it's financial software for cities and municipalities. And they all have funky, weird fiscal years. So like, I'm always like, okay, what's your fiscal year? And why can't you just do calendar year? And oh my God,
But actually, Toni, this brings up a really good new sidebar, which is big businesses, like really big and multi-million dollar operations. I mean, a municipality is not a company, but it's in some ways it operates like one with similar systems. Big companies and organizations like that are pretty different from teeny tiny individual ones, which we are. Like a city, yes, absolutely can and probably does have a different fiscal year. And if you're curious why, it's usually because they're funding schools and that like enrollment calendar is so big of a deal for them that they need to make the summer be the end of the year for them. You don't. We don't.
So, and real quick, because it's going to show on the video, but like I'm having a personal summer. I'm about to take this sweater off. So.
Okay. Oh, and I wish speaking of the video, I wish you guys could have seen Hannah's face when Toni was saying that she does tax software or she does the tax software thing, because I didn't know that either. So I'm
sorry.
Oh,
Secrets are being revealed.
It's warm. Yeah. Well, so I have to share really quick. Everyone who is going to be watching this video is probably about to watch Hannah's face again, do something ridiculous. So Hannah, I use your most hated software ever, TurboTax.
That's okay. It's okay.
Only because I had a CPA years ago. So I worked as a W-2 employee for 16 years, but I was a freelancer. It's weird. I worked in film. It was like a seasonal job. And I worked for someone else as a W-2. But then I also I usually had 4 or 5 W-2s a year because I worked on multiple movies and TV shows. And then I would usually have 4 or 5 or more 1099s, 1099 being the non-taxed, stuff that I had what's called a kit rental, which I had to provide my own computer basically and my own software. So they paid me to quote unquote rent that while I was working for them. But then that was a 1099 expense. So that was not under my W-2. And I had a CPA, but the CPA that I was working with, who I had worked with previously when I worked for corporate America, even in my film job was like, didn't get what I did. There was a big disconnect there. I didn't feel like she was very taking it seriously, even though it was a real job. I'm like, you watch movies, you see props, I do those props. So I ended up kind of just being like, I think I can do this by myself. I'm pretty good with money. And so I figured it out, but I'll tell you that I operated at a loss in the beginning as a surface pattern designer and illustrator using TurboTax, and I didn't get any money back. I just didn't owe any. So what's all that all about? Because does the IRS owe me money? And also,
I think if you
want
pay
to share
attention,
why you hate
Carrie,
TurboTax. Yeah,
like because I use TurboTax too, just because it's accessible and it's easy. But I hate it. It comes off your adjusted gross income. Like if you go back and pay attention, and you have that loss, that's where the money's coming back. They're taking it off your adjusted gross income. Because I was like, where did that go? And I had to like figure it out and look and see, and that's where.
But Hannah, you kind of rail against TurboTax in your emails, which is totally understandable. No, because they are manipulative. I know all about their little tricks where they make it look like it's free and it's not.
Yep.
But for those listening who do use TurboTax, and obviously our 2 podcast hosts do, can you share why using TurboTax maybe is not ideal? You don't have to completely, rat on them as a company, or you can, but what is the problem with using TurboTax?
Sure. I mean, I guess the problem is bigger. The problem is that we allow lobbying in the US. And so companies like Intuit, who own TurboTax, and like H&R Block, they can lobby Congress, and they do, to keep our tax laws complicated and to not do simplifications, even though we all would like them. And Intuit had a 20-year battle that ProPublica did this really wonderful investigative journalism report on. And I read it over a 3-part podcast series this summer. So if you want to go back and listen to me read that ProPublica expose on Intuit and their incredibly immoral behavior that prevents you from having the legally free tax return that honestly US tax law says you should have. You can go listen to the Sunlight podcast and get that. But so I think it's actually really lobbying is really the reason that it sucks so bad. The fact is that is the system we have. And while I'm happy to, illuminate and make people aware of what's going on and hopefully, fight against it, it is what we got. Yeah. So using TurboTax, ultimately, like I don't fault anybody who uses it and who's it's working for. If you're using it, like, great, enjoy.
Yeah.
But I
QuickBooks isn't that much better.
Oh gosh. Also owned by Intuit.
Are they? Okay, that makes so much sense then, because for a little while I had a CPA that had me subscribing to QuickBooks so that they could, just access everything. And I was just like, I actually know what a chart of accounts is and I cannot make heads or tails of this. And like, I'm not an accountant, but I have a baseline of what accounting is. And oh my God, this is the most convoluted piece of software I've ever seen.
Yeah, QuickBooks, and again, QuickBooks pretty much is the industry standard. So many accountants use it, want you to use it. It can be hard to get away from. I use a different software. I use a software called Xero, Xero, and I like it better. I think it's much more intuitive. It was built in the cloud. It's not retrofitted from like janky 90s software to try to fit into an online world.
I'll have to check that out. I've never heard of that.
It's quite nice.
I wrote it down.
It's not the cheapest one, but they're not selling my data and they're not, an immoral company lobbying against tax returns.
I have big issues. Like I try to, like, if I'm subscribing, if you're getting my money, I want to know what you're doing. And so we will definitely drop in the show notes Xero. And then Hannah, if you can send us a link to your episodes, we'll drop those in the show notes too.
Okay, awesome. Yeah, I'll give you that ProPublica one. I asked the reporters if it would be okay. So like this is shared with permission, and they were like, yeah.
Yeah, and I love ProPublica. They're great. Oh,
they're the best.
Yeah,
they're so good.
Sure.
Okay, I'm making a little note. Yeah, so I guess my answer on TurboTax is like, if it's working for you, fine. Like that's fine. Yeah. The law says that if you are in the 70% of US, like up to the 70th percentile of income in the US, you're entitled to a free tax return.
I didn't know that.
So most people listening to this podcast fall into that. Like you actually by law are entitled to get a free tax return. However, these companies, there's a lot of backroom dealing and they try to make exceptions like, oh, but if you have a Schedule C, so there's a program called VITA, the Voluntary Income Tax Assistance Program. And VITA runs like a free service where like volunteers, retired accountants, students of accounting will do your tax return for you for free. And this can be very helpful, especially if you have any complexity and you really need to talk to somebody. So those VITA programs are local based and they're usually run out of a big nonprofit. You might check Legal Aid in your area or here in Asheville, Pisgah Legal has a great VITA program, and this other company, nonprofit called On Track has another really good VITA program. And the bigger the organization that runs the VITA program, the more capability they have. So I would go for the biggest nonprofit in your area and check, because that's one that's more likely to handle a Schedule C, which if you're listening to the show, you've got a Schedule C, most likely.
Yeah. Oh, yeah. So I wrote that down too. We'll make sure to drop that in the show notes too. Cool. So I'm guessing that our listeners are going to be, the vast majority of them, an LLC, probably single member or a sole proprietor. We've probably got, Janine Van Gool is public about the fact that she is an S corporation, but I think that very few people, especially those starting out, are going to elect that. So can you talk us through the self-employment tax? Because if you're not an S corp, you are definitely getting self-employment tax.
Sure. Well, you also are if you're an S corp. Oh. Yes, we just call it something different. The formatting changes a little, but it's the same. It's the same thing. It's Medicare and Social Security.
Oh, okay. Okay. Got it.
Yeah. So happy to. So self-employment tax is this. When you're an employee, when you're paid on a W-2, you as the employee out of your own paycheck 7.65% of your pay is pulled out through the payroll operations and sent to the US Treasury to pay into your Medicare and Social Security accounts. Your boss pays a mirror image amount into your Medicare and Social Security. So your boss matches your contribution. So one half is paid by you, one half is paid by the boss, both 7.65% of your pay on that W-2. So a lot of us, and that's going to pay for your Medicare and Social Security. Now, on top of that, you still got federal income tax and you still got state income tax, right? And some little stuff at the state level, so small that it's like barely even registers, but like a little unemployment insurance, a little maybe disability, workers' comp. So, so the Medicare and Social Security, if you're an employee, is 7.65% of your pay. Now, here's the thing. When you're self-employed, you're the boss and the employee. You are both. And so the rules are translated over to us and they're exactly the same for us. But there's two really key differences that are very important. One, we don't have payroll. So there is no automation here. There's no automatic pulling out of your Medicare and Social Security. Two, you're not paying taxes, Medicare and Social Security or federal income tax on your revenue. You're paying on your profit. And nobody knows what your profit is until you've done your bookkeeping, right? So if you haven't done the math and said, okay, these are all the client invoices I got. Oh, but I also had this computer and this home office and this software, et cetera, et cetera. Like until you do that math, we don't even know what you're taxed on, right? So it really can't be automated.
Right.
You bookkeeping is as close as that gets. So you're paid on this dramatically smaller number. You get to take all your expenses out tax-free. Right. And no employee gets to do that. So just like for a moment, I want you to like sink into that. Like you're getting a really big benefit and it's awesome. But you pay both halves, both the employee half and the boss half of Medicare and Social Security. When you add 7.65% times 2, it equals 15.3%. And so that has its own special name, and we call that self-employment tax. So self-employment tax is you paying 15.3% of your profit every single year to your Medicare and Social Security account. And your self-employment tax comes, you haven't even touched paying your federal income tax, right? You're paying 15.3% of your profit towards your future retirement and healthcare benefit. You haven't even paid your income tax yet. So that is why people tend to really underestimate what they owe, because they say like, oh, I think I owe about 18% income tax, federal income tax rate. I'm going to set that aside. Okay, great. But it's 18 plus 15.3, which is a lot higher.
Exactly. And I found that out the hard way back in, I don't know, whatever year in the 90s when I first started freelancing. And then all of a sudden I was like, what is this? What are you talking about? I have to pay a self-employment tax. Like, what?
Yeah. That's how most people find out the hard way.
Yeah. Yeah. I was not pleased. So.
Yeah, it's true. So another way to think of it is your Schedule C, which is where you put your self-employment activity, you put your income, you put your expenses, you calculate your profit. I mean, it is literally setting up that equation. That is kind of what the Schedule C does. Mm-hmm. Whatever the profit is that's listed on that Schedule C is subject to self-employment tax. If you're listing it on the Schedule C, you're paying self-employment tax on it. So that's another way to think of it.
Right. So if we did that in easy math, so if your profit was $100, mm-hmm. and let's say your corporate tax rate is 20% just for math. So that's $20 you need to put aside.
Wait, I want to pause you because you don't have a corporate tax rate. That's just not a true thing.
Okay, well, let's call it your federal tax.
Sure.
Right? Like the tax on that. So let's say it's 20%. 20% gets put aside, but an extra $15.30 also needs to get put aside as your self-employment tax.
Correct.
So on that $100 profit, you're putting aside $35.30 based on my math.
That is correct.
Okay.
That is correct. Although I will also mention that the federal income tax rates are not as high as people think they are, because those tax rates are actually marginal tax rates. And in economics, marginal means on the edge. So what that means is that is the rate at which your very highest dollar is taxed, but it's not the rate that is taxed on all of your dollars. So your first $11,000 is taxed at a rate of 0. Your next approximately 10,000 is taxed at a rate of 10. And it goes, and we call this the graduated income tax system. It's actually very progressive because people with the least money pay the least amount of tax. So looking at tax brackets is like almost a red herring. It's alarmist. It makes you think your taxes are way higher than they are. I think that might be strategic on the part of people who have certain motivations, but is not really your tax rate.
No, that's actually kind of comforting. Like I was aware that like when I was younger and in high school, like and making no money at all, you know, it was like I didn't even make $10,000 that year. You didn't even have to file or something like that. But even though my dad was like, "You're gonna file anyway," I'm like, "Okay, whatever, I don't care." But you know, so like I never understood that. So like I appreciate that knowledge. And also with the self-employment tax, I was always pissed about it, quite frankly, because I was like, why am I getting penalized because I have my own business? Like, what the fuck is this? But no one has ever said, no, that's your Medicaid, your Medicare, and your Social Security. Because I'm like, well, now it makes sense because nobody's paying that for me, you know? So I get now that I have to pay that in. They should call it that.
Yes.
You know?
More opaque behavior from our friends. Yay. I have a really quick question that I wanted to ask you, Hannah, that may apply to some of our listeners. I know it applies to a lot of people who sell their patterns on places like Spoonflower and Redbubble and Society6. So there's a difference, obviously, in terms of your relationship with your whoever's giving you this money. When you have a client, you're designing for them, they pay you. They may or may not send you a 1099, but then you've got, you know, a record of this is when they paid you, this is how much they paid you, this is the amount of money you spent on the materials or software that it, you know, that your expenses for that project. But then there's the good old fun part of, you know, print on demand, for instance, that's royalties or art licensing. Is there anything that anybody should keep in mind? And I'm kind of asking for myself too, as far as, you know, especially there are a lot of these companies don't send 1099s. Some of them do. I know Spoonflower does, which is great. And I'm lucky in that that's where the majority of my royalty income comes from, aside from art licensing, you know, like my print on demand royalties. But is there anything people should keep in mind or pay attention to, or any way they should keep track of things like royalties from multiple print on demand sites? And also, you know, you can calculate expenses like, okay, I worked on this logo for this time period. I pay this much in, you know, monthly fee for Adobe Creative Cloud. Okay, I can kind of figure that in as an expense. But how do you do that for something that's like sitting on a site forever, earning you royalties every month, every year?
Yeah. So there's kind of two different ways to think about it. One, I just want to say, in terms of just like tax, first of all, companies that owe you 1099 should be giving you a 1099, and that's their bad, and that's not cool. You know, the good news about tax law is that you're definitely responsible for yourself, and you have to follow the law. You can't force other people to follow the law, although where the IRS can pressure someone to make sure everybody follows the law, they can and they do. And believe me, as a licensed tax professional, part of the pressure comes down on me. So as long as you are reporting your income, you're going to be fine, right? It's when you don't report income that you made, you are not fine. Because you know, audits happen in retrospect. They're always retroactive. So, you know, up to 3 years after you did the thing, the IRS can be like, oh, hey, seems like you maybe didn't report some income. What you know, you want to talk about that? And believe me, you'd rather not. So
I'll bet.
Just report it.
Yeah.
If you've broken the law and the IRS, you know, finds that, there's not a good option for you. Like that's not a fun time. So
right. And if you're, if you're just starting out and you're operating at a loss, like we were talking earlier, I know that, typically you're not, it's not like you're not going to get audited, but you're a new business that I think the IRS, it looks like, kind of expects. It's not like you're going to start a new business and then have this crazy profit the first year. But I know that at some point they're probably, like, let's say you've been running your business for 6 years and you're not operating at a huge loss, but maybe you paid for a crazy, course, or you paid for a really expensive, editing suite for your Skillshare classes or whatever. Is there, I mean, obviously I know it's not tax advice, but like, I'm always thinking like, oh, I don't want to get audited, and I follow all the rules and I report all my income. But, in terms of like, if you're operating at a loss, do you think there's any point where the IRS is going to be like, look, you have a loss for the first 3 years of your business, guys, come on, we're going to start looking at auditing you because you can't keep having a loss every year? Or is there anything to keep in mind for that?
Yeah, for sure. I mean, the IRS has a right to look at anything in your taxes any year. So you should do your taxes with the assumption that is true, because that is true. And generally, a loss is a tax benefit to you when you have a loss and you are operating a genuine business. And what that means is you have a profit motive. You are trying to make money, right? If it's a hobby, you don't have this protection. If you're a hobby, you don't get to take a loss, and you actually don't get to take expenses either. So there's a really big difference between a hobby and a business. And this is part of why I founded my company, because being treated like a hobby when you're actually a business is the worst, because it means you're missing out on stuff. So the IRS has kind of a baseline rule called the hobby loss rule. And really it serves really just as a guideline. I think a lot of accountants over apply it, basically because they're just trying to be really conservative with their clients, or because they're lazy. But basically the hobby loss rule says, so given that you can be audited in any year, like it doesn't matter if you have a loss or not, you can still be audited. So if you are audited over the fact that you have a loss in your business, then the burden of proof is on the IRS. The assumption is you are a business and they have to prove otherwise. Now, if you don't have a profit in 3 of the last 5 years, then, and here's where accountants tell you the wrong thing. A lot of accountants will say, well, now you're a hobby. And I'll be like, my motives did not change. I'm still trying, that's not actually logical, right?
Right.
But what is true is that the burden of proof changes. So now if you're audited for that thing, the IRS, the burden of proof is on you, right? Presumption, you're a hobby. You have to prove through your excellent books and records that you have a profit motive, that you're in fact a business, maybe a business going through a hard time, or in a bad economy, suffering from a recent earthquake, tornado, things can happen. And that doesn't mean you lost your profit motive. It might mean like your mom got cancer, like things can happen to make your business not do well. So losses, if you have, the more losses you have, the more it makes sense for the IRS to be like, well, hey, like, do you have a profit motive? And, you have to answer the question. Right. You have to show, and by that, I mean, you have to show the proof.
Yeah. So I have one more question. I think we have you for 10 more minutes. Is that right?
Yeah.
Okay. So we'll try to make this really fast, because I know one of the things I really struggled with when I was still on POD sites was sales tax, right? So because they're collecting and remitting the sales tax, but at least in Kansas, I have to, even if I have 0 sales, I have to file a sales tax return. Yeah. So like I've always made the assumption I had to get their reports, and like I have to report what they've remitted. Like honestly, I just came off because like I don't have time to figure all this out. I'm just not going to do POD right now until I figure all this out. But so like what do you do there?
Sure. So let me reiterate my disclaimer, because sales tax rules are different in every state. Okay. So if I were to tell you, even if I knew off the top of my head what Kansas sales tax rules were, and I don't, and I were to tell you, and somebody in Missouri were hearing it, it could be the wrong advice for them. Sure. So you got to be very careful. So what I would say with sales tax is like, look at your Department of Revenue for your state. They usually have a pretty decent FAQ, And, you need to read your state's definitions of things. You cannot apply Kansas rules to Missouri. It's very important. You are in the correct place.
Good to know.
With that said, though, the way that sales tax work is fundamentally different from income taxes because it's never your money. Income tax, you earn it and you pay it.
Right.
Sales tax, you never earn it. It's never yours. You collect it and you remit it. That's why they use that different language.
Yeah.
Basically, you're collecting money on behalf of the state, and therefore the state gets real cranky about it.
Oh, yeah.
Oh, yeah.
So when I forgot to file a sales tax return, they issued a tax warrant. I freaked out.
That's an alarming word.
Yes.
Wow.
And I called them because
they come to your door?
I got a letter and they were like, blah, 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 tax warrant. And you will be served. It was kind of like a warning. So I'm immediately calling them and 2 seconds away from crying. And I'm like, what are you talking about? Oh my God. And then, talk to the lady. She was super nice. And she's like, look, we're, because I told her I had 0 sales. I came off all the sites. I didn't know I had to do it if I had $0, because I hadn't filed a $0 tax return. And she's like, well, we're going to cancel it, but you have to go to the court. I had to go to the courthouse and file some paperwork. It cost me like $50. Wow. I had a $0 tax return that I had to pay $50 for.
That's intense.
And it was so scary.
The way that it worked, and again, when I say in most states, please check your state. This is not necessarily for you. You have to check. But the way that it works for most states is, first of all, you have to register with your state to collect sales tax. It's technically, and I believe this is true in all states, it's technically illegal to collect it without having registered. So there is a first step. Usually when you do that registration to collect sales tax, you're going to be exchanging some ID information, and they will also assign you a filing frequency. So usually, sorry, I just got distracted. There's a bear outside my window.
What? Where do you live? North Carolina?
Oh my goodness.
But you're in Asheville. Whoa.
There's a well, you know what? A bear killed 3 of my 4 chickens this weekend. It was a bit of a bit of a moment. We have a lot of bears.
I'm so sorry to hear that.
I'm sorry. Yeah.
And that sounds really terrifying. I'm really glad I'm in the middle of an urban landscape right now. Oh my God.
I moved here from New York City and I was like, wait a minute, what? They're just bears who come to your front door and people are cool with this. And everybody here is
are they black bears or brown bears?
They're black bears.
Okay.
I'd be much more freaked out if they were brown bears, but
yeah.
Yeah. Or grizzly. Anyway. No, not grizzly bears.
Yeah.
We don't. Okay. Yeah. All those kind of bears are much more dangerous.
Yeah.
Not that a black bear is not totally not dangerous.
Yeah. But still.
Anyway,
it's degrees.
Lock your door, Hannah.
So sales tax. So with sales tax, generally the state will assign you a filing frequency, and usually that's based on the amount of volume you have. So if you're a very occasional seller, you might be an annual sales tax filer.
Yeah, that's me.
There's no call for you to file a monthly sales tax return if you have, like me, maybe sell 3 paintings in a year.
Yeah.
A lot of people running a business will have a quarterly filing. Or it could be monthly if you have high enough sales volume. I mean, God bless, you're selling a lot if you're monthly.
Right. That's a good problem to have. Yeah.
It's a good problem. Yes. Most money things are that way. You're paying higher taxes. That usually means you're making great money. So that filing frequency is important because that tells you when you have to do the report and remit the tax. And you're correct. The thing you're saying is very much true. States do vary, but most states, even if you earn nothing, even if you owe 0 for sales tax, most of them still require that you file a report saying, I owe you nothing. You have to make it official. And
it's like an annual recurring appointment on my calendar now.
Yeah. Don't forget that again.
Yeah.
So, Hannah, I feel like I learned a lot, but I also feel like there's so much that I don't know. If people want to learn more from you, I know you teach a lot about this and many other fun money things that make us cranky. So I would love for you to share.
Yeah. So I have I have a program. I mean, first of all, if you come to my website, which is sunlighttax.com, you can kind of find everything. I have a lot of free resources, like a free visual guide to tax deductions, which is really useful, like 1-page printable deduction guide for you. But I also have a program. So my program is called Money Bootcamp, and basically all the hard work that I do, all the new courses, all the tax laws I study, I put that into my program. So if you join, it's lifetime access and you get all of it.
Nice.
But it basically teaches you how to understand your tax situation and then how to manage it. And so it's based on a philosophy of you're not an idiot and the work you do is really valuable in this world. And also that doesn't mean you necessarily want to sit and read 30 pages of tax code and like, let's get this done.
Right.
So it's kind of about setting up systems that automate things so that it's easy for you. So you kind of are doing the right thing by default and you don't get stuck in that like tax pain cycle. So, I can give you the link to go, for the sales page for that program for sure. But also I have like a little 1-hour free class where I kind of teach some of the ways that people get stuck and some of the ways that I teach to get unstuck. And so that's a good intro to kind of a little bit like if you're the right person for this work. And also it tells you what my program is about. So if you're interested, that free class is kind of a good like gateway to learn a couple really valuable things right away, and also to see if the program is like a good fit for you. So that is available on demand at go.sunlighttax.com/register. So people can go at any time to that link and watch that class.
Excellent. We'll definitely make sure to share these in the show notes for listeners.
Awesome.
And is there anything, well, first, I think I've asked all my questions. I don't know if you've asked all yours, Toni, but also before we go, I wanted to make sure, Hannah, there wasn't anything else you wanted to share. And actually, Toni, I just watched your interview with Mandy, and you have really good hot seat questions. So if you want to ask those or not, you totally don't have to, but I hadn't done that before, but they're really good ones.
Sure. I'll try to remember them. I don't have them like in front of me, but I think I definitely asked Mandy, like, what's your go-to song when you need like uplifting or something like that?
Oh man. I love Megan Thee Stallion.
Nice.
Oh my gosh.
I totally was not prepared for that answer. I love that.
I'm a closet hip hop dance devotee. I go to a dance class 3 times a week.
I love it.
Awesome.
I love it. I grew up in the 80s with Eric B and Rakim and like all of that. So like we're here.
Love it.
Totally cool.
Love it.
Okay, dogs or cats?
Or bears.
I've loved both, but at the moment I have a dog and no cats. So I'll say
what
dog.
breed?
The mutt breed. The shelter special is my favorite.
The rescue breed.
The rescue breed.
The best breeds.
That's my favorite.
Trying to think.
What's your favorite color?
Yeah, favorite color.
I am a painter. Do you know how hard that is?
Yeah. But I had to ask because I used to ask that to people all the time anyway. And I just, it's hard to pick, but yeah. Okay.
I feel like I want a different color on every day. And I don't want to be locked in.
Yeah.
I love them all.
For sure. All right. Last
color in relationship is just like people. Like I want them together.
That's true. Yeah. No, color has so many different meanings. So the last one I'm going to ask you, so we know you got to go. Favorite movie?
Ooh. Okay. Goodfellas.
Really?
Classic.
I love that one.
It's the only movie I ever can watch multiple times. And I'm like, I hope this doesn't end.
Yeah.
I just love that movie. Yeah.
It is a classic. That's a great one. A great one. Well, Hannah, thank you so much. I learned so much from you and things I didn't know and things I'm going to go talk to my accountant about and like make sure I'm doing right and all the good stuff. So I know you got to go, but thank you so much. And, in the future, I'm sure there are other things that we could talk about. We'd love to have you back.
I'd love to come back. Yeah. Awesome. Thanks for having me. It's been great to talk to both of you. Thank you so much.
Thank you so much, Hannah. And good luck with the bear. I hope the bear is gone.
I'm going to go yell at it. I'm going to go bang some pots.
Okay, good.
All right. Thanks.
Take care. Thank you.
Bye.
If you're loving this podcast, don't forget to hit that subscribe button so you never miss an episode. And while you're at it, we'd love it if you could rate and review us. Your support helps more people discover the show and it keeps us going strong. Thanks for tuning in. It means a lot. I'm Toni.
And I'm Carrie. It's okay to be cranky.
In the meantime, keep creating.